welcome to this edition of Startup Central. I'm Nayanthara Rai. This is your one-stop destination to know everything from startups to entrepreneurship to disruption to the latest in tech. Basically, if it falls under the gambit of the new economy, it's going to be here on ET Now at 6 p.m. every weekday. Ladies and gentlemen, just like all the stakeholders of the community that we get on this show, the team that puts the show together, the Startup Central team, thrives on constructive criticism. We want to hear from you. How to take the show to the next level, what's missing, what we should add to it, shake things up. Keep writing into us. We love getting your emails. Our email address right on top, suc@etnow.tv. Today is a special day because there's a new unicorn. Seems like every other week there's a new unicorn, isn't there? Well, it's the 15th unicorn of 2021. It is Urban Company, formerly called as Urban Club. This hyper-local marketplace providing services, be it personal grooming to deep cleaning to maintenance of appliances, etc., has raised over $255 million from a clutch of investors, the funding round being led by Prosus Ventures. The likes of Tiger Global, existing investors have also doubled down. And what's really interesting is Urban Company, just like Cred, just like ShareChat, has entered the Unicorn Club with a $2 billion plus valuation. That's a $2.1 billion plus valuation post-money, of course. So what's the future plan? What does it want to do with all of this money? Remember, Urban Company also has more than 35,000 gig workers as part of its marketplace. Incidentally, this fundraiser was actually done at the peak of the second wave of coronavirus. But Urban Company had decided to hold back on making the announcement because it was dealing with that crisis. Well, since then, the co-founder, Abhiraj Singh, has given us an interview. This is what we recorded with him earlier in the day. Thanks, Abhiraj, for joining us here on ET Now. It's a big fundraise, big one. Look at the valuation jump. You're entering, the $2 billion club as well. This funding, of course, happened earlier, but you held back on rejoicing it, on talking about it because of COVID-19 and the second wave. Take us to the details.
Thank you very much for having me, Nayanthara. I think the recently concluded fundraise is a testament to our continued performance and growth as a company. We're very happy to welcome on the cap table Prosus, Wellington and Dragoneel as our new investors, even as existing investors, VY Capital, StepView and Tiger Global have doubled down and renewed their commitment in the company. I think the valuation in itself is just a very small milestone in a long journey that Urban Company has to undertake over the next few decades. We hope to be 100, 200, 300 times larger than we are today in the years to come. And in that scheme of things, I think it's very much day one for us, and probably the first milestone in an ultra marathon of several miles and several milestones along the way.
It's always great to hear when existing investors also double down, because it means that the company is doing well, the existing investors want to continue betting and all of that. The big question is that what are you going to do with this $200 million plus, this big fundraise? What's the plan?
I think the primary focus, Nayanthara, is going to be on organic growth. We are, as you know, in the pandemic, we have rapidly scaled up our business across geographies and countries. Prior to the pandemic, we were only present in 10 cities in India. Today, we're present in 30. And by the end of this calendar year, we intend to be present in more than 50 cities in India. And hopefully, by the end of 2022, we want to be present in 100 cities in India. Similarly, internationally, before the pandemic, we were only in one city internationally. And today, we're present in about 6. So we will continue to expand our geographic footprint, both within India as well as outside of India. We will also look to double dive on our existing service categories. whether it's the entire beauty vertical, particularly men's haircut and grooming services, which usually see a massive surge in the pandemic and post-COVID waves, and we're already seeing that right now. And also on the home vertical side, which includes all kinds of home repair and maintenance services like plumbing, carpentry, cleaning, disinfection, appliance repair, where also we're seeing an uptick. So we will continue to double dive on these categories even as we expand our geographic footprint. We're also not averse to inorganic growth, but the primary level for growth is going to be organic, both geographic expansion as well as expanding into existing categories and new categories.
So, I want to build on all this one by one. You want to build categories, you want to enter more geographies, and you're looking at inorganic growth. But you also got this money during the second wave, right? Can I ask you, have you noticed any difference in the consumer behavior during wave 1 and wave 2?
Yes, absolutely. I think the wave 2 has been, although in its own magnitude, the wave 2 was significantly more larger and unprecedented than wave 1. I think in terms of the disruption to our business, it has been a lot less, a lot less disruptive. In the first wave and the first set of lockdowns that happened last year, our business went from 100 to nearly 0. And then it took about 4 to 5 months for it to climb back to that 100 level. But post then it was growing and scaling. And by March of this year, it had almost reached 2x, or say 200 of where it was pre-pandemic. In April and May, we have seen some impact because of the COVID waves, but nothing even remotely as close to what we saw last year. So we continue to be well above our pre-pandemic levels, and have only seen about 20-30% disruption of business. Also, we're seeing rapid bounce back already as the wave is receding. And unlike the first time around where it took us 4-5 months to bounce back to pre-pandemic levels, this time we expect a bounce back in maybe a couple of months. And we actually don't think that this is going to be the last wave. Maybe there are future waves, maybe there are not. Let's hope there are none. But even if there are, a third wave or a fourth wave, we think that with every wave, our business is becoming stronger and more resilient, and we're learning. So hopefully in the third wave, we'll only, get impacted 10% and take less than a month to bounce back. And maybe by the fourth wave, we don't even feel the impact of the wave. I think what's more important is once the wave recedes, we as a company see an opportunity for secular growth for a period of time and rapid growth for a period of time. And that's what we saw last year when, post reaching the pre-pandemic levels, we quickly accelerated to almost reaching 2x of the pre-pandemic levels in the months that followed. And we expect no differently now, starting June, July. The reason for that is threefold. One is, obviously, as consumers continue to remain at home, they prefer services coming to them versus them stepping out and getting services done. So versus, me stepping out and going to a barbershop for a haircut, or my wife stepping out and going to a salon for her beauty treatment, or me taking my appliance to a local repair shop, I prefer the solutions coming to me at my doorstep. The second is there's a lot more affinity towards online and organized solutions. On Urban Company, I know that the services are safe. I'm now seeing a live vaccination tracker to tell me what percentage of partners are vaccinated. I can actually see if the service professional assigned to me is vaccinated and actually review his certificate. Plus, there is PPE kits, there is adequate testing happening. So the services are significantly safer compared to any other offline option. And there is an overall secular wave that the pandemic has accelerated towards all kinds of online solutions, making consumers a lot more comfortable to consume commerce online.
Right.
So I think we find ourselves at the intersection of all of those three, which is why once the wave recedes, we usually see a fairly sharp, not just bounce back, but secular growth beyond that.
So you're basically also telling me that while you've seen these changes in consumer behavior, the sense I'm getting from you is that Urban Company is also prepared that just in case there's a third wave, it's prepared basically.
Absolutely. I mean, we are prepared for a future where we have to live with COVID, and it becomes an endemic disease in our society. And with that comes, a lot of focus on how we, create our SOPs, what our safety standards have to be, how we think about safeguarding our service partner community. We're amongst, as you know this, Nandara, we're amongst the first companies to announce that we will vaccinate the entire base of our service professionals, 35,000 of them, at the expense of the company. We are now well and truly on our way and already have hit about 50% of that base being vaccinated. And we expect by the end of June for almost all our service professionals, barring a few hesitants, to get vaccinated with the first jab. So these efforts are underway, and they help us become a lot more resilient and honestly fine-tune the playbook of how to deal with the pandemic in case it is here to stay for a much longer period of time than any of us would like.
From a business perspective, Abhiraj, if I were to ask you that, towards the end of wave 1, and now, with the numbers that the government is releasing, wave 2 seems to be behind us, at least in the urban centers. Bounce back of business, is there a difference?
For sure. I think wave 1 took a lot longer to bounce back. I think now we're seeing much, much more rapid bounce back. So, as I mentioned, if you take wave 1, pre-wave 1, pre-pandemic at 100, if you index it at 100, in the wave 1, we went to 0, and it took about 4-5 months to get back to 100. Wave 2, we started at almost 200. We're now down to about 160, 170. And we think we'll not just reach 200 in the next couple of months, we think we'll rapidly grow beyond that. So we are already significantly higher than our pre-pandemic and wave 1 levels, even in the peak of the wave 2. And we expect very, very rapid recovery and rapid acceleration thereafter in the months to follow. At least that's what we're hoping to achieve, and that's what we're committed to achieving as a company.
Okay, now from a business perspective, I wanted to also ask you one more question. This new trend, because of the liquidity, how people are like hop, skipping, jumping, missing the $1 billion plus valuation and entering $2 billion directly. There is a lot of liquidity. It's going to be interesting the days ahead. Could you have raised more? Did you have to say, no, this is it? Because a lot of people tell us that. A lot of founders tell us that.
I think we were in a very fortunate position. We opened the round to a very, very select group of high quality, long-only crossover investors who are largely public market investors, but also do some private investing selectively for companies which are IPO bound. Amongst that select group of investors that we opened the round to, in a very short period of time, we had the round massively oversubscribed by almost 3 times. And, we honestly had to not just say no to taking more money. We had to work very hard to unlock any secondary, and it was not an easy conversation with some of the early investors. So yes, I think it is an environment where liquidity is right, but I wouldn't say that's the case for everybody. I think it is true for companies of certain scale and size and certain high quality companies which are seeing most of the capital going to them. And of course, it's up to these companies and companies like us to ensure that this doesn't get to our head and we don't get ahead of ourselves and use this capital judiciously. We've seen this in the past, peaks and troughs in the fundraising environment come and go. But I think what sticks is the ability to build an enduring, long-lasting institution and company. And such companies, regardless of the external environment, will always have the opportunity to raise more capital if they need to.
Quick reaction on the maturity that we're going to see in the ecosystem. Zomato's filed the DRHP, Paytm, board has approved. There's so many more that are headed to the large street. Are you?
I think we'll be followers to Paytm and Zomato and a few others like Nykaa, etc. We're still probably 18 to 24 months away. Although we have also started our preparations and very, very actively started to think about all the checklists that we have to meet in order to be ready to go public. But I think we're, grateful that several like Zomato and Paytm and several others will pave the way for companies like us. I think the next 18 to 24 months is going to be exciting. I think a lot of companies, potentially even as many as double-digit companies, might end up going public by the end of 2022, which is between now and 18 months later. So definitely an exciting time for India Internet Inc. And for retail investors who so far haven't had the opportunity to own some of their most favorite brands that they buy from and consume from on a day-to-day basis. I think in the long run, the performance of these companies will be measured with a lot of scrutiny by the public markets, and that will be the point of inflection and maturity to your question, Nayantara. Not just the event of going public, but actually continuing to perform and outperform against the expectations of the street several years into being a publicly traded and listed company.
So it's on the cards for you folks, whether it's after 18 months or what?
Oh, absolutely. Absolutely. I mean, even if you see this round, several of the investors who've come onto our cap table are, classically crossover investors who take, like, the largest of their positions are in the public markets, and they selectively do pre-IPOs and privates. And the intention was to do it as potentially the last round before we go public over the next 18 odd months. So 18 to 24 months is the horizon that we're looking at. Of course, closer to date, we'll take a final call on the specificity of the timing, the jurisdiction, and other such details. But, we are quite committed to taking the company public. It is not something that we, say, we actually never spoken about this until this point in time, and it is something that we're looking at.
Okay, so that's the first time you're breaking your silence and saying Urban Company will become a public company, anytime within 18 to 22 months. You don't know the domicile as yet. Maybe we'll have the direct overseas listing. But, Abhiraj, it's going to be very big for the ecosystem. It shows coming of age. But there is also concern, right, that you're going to have so many internet companies. Will it get overcrowded? And do the Indian markets have the maturity to understand that none of them are delivering profits, that many of them will stay loss-making for years to come?
Of course, we think about it. And I think, I also think that, being loss-making for a very long time is not healthy. So these concerns are not unfounded. They are legitimate. And I think any markets, whether Indian markets or overseas markets, will not have patience for companies which do not represent strong unit economics and a very clear path to profitability, and eventually get on that path and achieve profitability, versus only talking about path to profitability for the entirety of their adolescence and adulthood. I think it's imperative that companies end up making profits, and of course you want to ensure that you're not compromising scale, and you're not trying to do it at a scale that's too small. And so that's a balancing act, and it usually requires very strong unit economics to be in place first before you start on the scaling journey, and constant iterations to ensure that you have a profitable business model and you have a very clear path to profitability. I think this will be a crucible test for several of us, and there's no shying away from it. At the end of the day, markets reward companies with very, very large and growing free cash flows. And that's been the truth for decades past, and that's going to be the truth for decades forward.
Great. And with that, Abhiraj, I'd like to thank you for joining us today on ET Now. It's always a pleasure talking to you. Congratulations again on the big fundraise. Look forward to more interviews in the near future.
Thank you so much, Nayantara. Always a pleasure.